Hey everybody, Gary with Basecamp Trading. Let's take a look at an opportunity we had in the ES futures today. And you can see that the ES futures actually during the London session had broken underneath this 50 EMA support. And you can see how many times it had bounced off of that throughout the night. And then it broke underneath there and made a pretty nice push to the downside actually. Momentum had crossed to the downside, and again, pretty nice move to the downside. But then we hit significantly undervalued, and on the value charts, we know we hit significantly undervalued, that one of three things are going to happen. We are either going to pull back, we're going to consolidate, or we're going to reverse. Usually we pull back and consolidate. This particular case, we ended up reversing. We had the bullish hammer, and it's a bullish hammer because you have a bottoming tail, and the entire body of the bar was also all buying. And it was followed up by another really bullish hammer bar, bottoming tail. Entire body of that bar was all buying, and another bullish bar, and another bullish bar right into resistance. That 50 EMA was support most of the Asian session, broke underneath it for a down move in the London session, and then up here as resistance. And then as we were coming into the London session, we kept tagging this 50 EMA, and we set up two dojis in a row. And on the 30-minute chart, we get two dojis in a row, and we do what we call our bracket the doji play. We put our trend line in at the top, our trend line in at the bottom, and then you just trade a break in one direction or the other. Whichever way it breaks out, that's the way we look to trade it. Now, we did have some pretty bullish signs with all this happening. You see the fast and slow line cross to the upside. So we had bullish momentum. We had really bullish bars moving up, and then we consolidated a little bit. And you can see we touched significantly overvalued right there. And so we consolidated, and then we broke above the dojis on our bracket the doji. That would have been your aggressive entry, and that would have been in at 4106.55 or 4106.75 would have been your entry on that. And you see that was a nice follow through. The trigger bar was a really bullish bar, came down, tested that 51 more time, and then moved higher. And that was a really bullish bar, bottoming tail. The entire body of this bar was all buying. If you wanted to play something a little more conservative, we had this well-defined resistance line at 41.14 and a quarter. You see that went all the way back into the Asian session. And we ended up breaking through that, and the break was, again, a really strong bullish bar. We broke above it, made a nice bullish bar. The entire body of the bar was buying, and we closed above the breakout point. Pushed up into the 200, found resistance. Again, we know the 50 and the 200 are significant resistance and support lines. Pulled back under it a little bit, and then broke. And this was another really bullish bar. You broke above it. The entire body of the bar was buying, and another strong close above our 200 EMA resistance. And then the ES just continued to push higher. Now we had hit significantly overvalued several bars in a row, but there's a reason that we would continue to trade this, and a reason that we would stay with this even though we're significantly overvalued. And that's because we were moving into confluence on our higher time frame charts. If you look at the 240-minute chart, right here in the London sessions where you triggered a reversal doji and made that push to the downside in the London session, then the next bar opened right here, and this was a really bullish bar. The entire body of the bar was all buying, broke above the 200, ran right into the 50 EMA, found resistance right there. But at that time, you were also triggering a one red finger, and that's a really bullish momentum setup. So now we have a bullish 30-minute chart. We have a bullish 240-minute chart. And as you were breaking this resistance line, that's when you're triggering the one red finger on the 240s. And then also the other reason that you would go ahead and stay with this trade is because you ended up triggering a daily trigger as well. And right here you can see that we triggered a reversal doji on the daily chart. Now that doji didn't actually trigger until you were above 41.23, but that gave strength to the confluence on all the higher time frames. We are now bullish with a daily trigger. We were bullish with a 240-minute trigger and bullish with a 30-minute trigger. So now we're in confluence with all of our higher time frame charts. And we know that under those circumstances, those are the times that it's reasonable to expect larger moves. You're not guaranteed that you're going to have a larger move. But again, when we're in confluence with a daily trigger, a 240-minute trigger, and a 30-minute trigger, we know that those are the times that we at least look for the larger trade. And one way that really helps you stay with that type of scenario, the one thing that will help keep you in the trade is the Trend to Pro 2.0 indicator. Now, this was where you triggered that 30-minute hammer in the London session, and you continued to push higher. You went from bearish to neutral to mild bullish to strong bullish. And right here is that power line and that significant resistance at 41.14 and a quarter. That triggered in right here. And if you're trading the rules of Trend to Pro 2.0, there's no reason to get out of this trade. Now, you were starting to get extended. I could see, often when we get this many bars in a row that are extended, get out on the first reversal bar. But again, on this particular trade, we knew we had confluence on our higher time frame charts. All three of our higher time frame charts were all in confluence. So this little pullback didn't even take us back to the 18 EMA. So again, if you're trading strictly by the rules of Trend to Pro 2.0, you have one bar reversal, no big deal, and you just stay in until you get a close below the trail stop bar. And right there is the trail stop bar. So your exit would have been at 41.55 and 3/4. You were in at 41.14 and a half. So that's 41 full ES points, or more than $2,000 per contract. Now, you had gotten a bunch of extended bars, and on this first reversal bar, I could see where you might go ahead and get out because you were forming bearish divergence at the same time. See, we had a significantly higher high and a lower high on momentum and the VSI. The VSI, we were painting dots indicating that the buying volume was starting to dry up. And when that first reversal bar triggered, you triggered a red VSI line. So again, if you wanted to go ahead and get out right there, that would make total sense as well. If you didn't get out there and just followed the rules of Trend to Pro 2.0, you would have been out down there. Either way, you would have had a really, really nice trade. And that's what's nice about Trend to Pro 2.0. On days, especially when we have higher time frame confluence like that, we know that it's reasonable to expect a larger move. Now, you don't get it every time. This is trading. Nothing's guaranteed, so you don't get it every time. But we do know that it's reasonable to expect it. And with Trend to Pro 2.0 not even signaling us to get out, no reason not to stay with that trade. Another way you could have traded this would have been the 5-minute chart. You could see you had a channel on the 5-minute chart. The significant resistance was at 41.14 and a quarter. And you could see that you put in a higher low, you broke out above resistance, and this was a strong bullish breakout bar. Opened at the bottom, closed at the top, and closed above resistance. So this was a really bullish 5-minute setup as well. You had bullish momentum, broke above significant resistance, and a nice move to the upside. So several different ways to take advantage of a pretty large move in the ES today. And again, Trend Pro 2.0 is a tool that we can use to really help us maximize our profits.